Hi guys, this is James. I just want to check if you guys are able to hear me clearly. Yep. I hope that we are trying. There's some issue with Zoom, so I apologize for that. I am actually currently looking at over here. Hi. Just give me 1 second. Let me just uh share my screen. Okay. Hope you guys are able to hear my screen over here. You guys are able to see it live on YouTube as well. I am actually waiting for Ash and Jeff to be in. So just give us a few minutes before we start. This is a new software that we are testing out. Something wrong with Zoom, which I am trying to rectify. I'm not too sure what happened. All right. I apologize for that. We are running into some technical issues over here. Hope that this software is doing fine for us. Okay. All right. I believe you guys are able to see my screen. That's great. Let me just pop out of my screen sharing first, and then I will get just making sure that everyone can see. I just will be getting Jeff and Ash into the room. Yes, Jeff and Ash are definitely able to join us. I'm just getting them able to use the software. All right. So just hold on for a second. Ash, Jeff, everyone able to see you now, and I'm adding you into the stream. Ash and Jeff, you are both added into the stream. You can start talking.
Okay. I can't see. Let's see.
I'll talk to you guys on that.
All right.
I'm leaving here because otherwise we'll be on two places.
Okay. All right, buddy. All right. Speak later.
Cheers.
I don't. Can you guys hear us? Oh, Lloyd can hear us. Okay, so we are here now. How I show my screen, I haven't got a clue. Oh, here we go.
Hi, Ash.
Yep.
Can you guys see? I hope the people online on YouTube can see you guys. You guys would just need to that on your browser. There should be something that's called share screen. That's where you can share your screen.
Yeah, I see it there, mate. Okay, sorry about this, guys. We've just been trying to get in, but Zoom has changed some settings that we didn't know about, and it's put us just a bit behind here. So
it's a lot behind.
We're a lot behind here. Chart window. There we go.
And I really don't want my camera on, but it's on. For
Okay. I can't even.
Are you guys able to see the comments on your browser? That's the comments that's from YouTube.
Okie dokie.
You guys are going through as I'm teaching our traders on how to use this software. I apologize for that.
Right, share screen.
I can see a chat box, but I cannot see any messages.
No, I don't know. Let me see.
James, how do I turn my camera off, mate?
Oh, gosh. This says that this may crash, guys. So if it crashes, then I'll have to figure something else out. Can you guys see my screen?
Yes, they can see now.
Alrighty, all right. So we're not in bad shape, albeit late.
James, how do I turn my camera off, please?
Oh, they can. No, I can't see you, Jeff, and nor can the guys.
As soon as I share screen, they should be able to. Yeah.
I don't think so, mate. I don't think so. You're
Okay.
all right. Yeah, you're all right. I'm sharing screen.
Okay. I have to put some clothes on.
Otherwise, we're going to get banned from this as well.
Again.
Maybe that's why we're not on, guys. We might have been kicked out of YouTube because we've finally been banned. They've caught up with us. Anyway, let's talk markets because we are well behind. There wasn't a trade this morning anyway. Jeff obviously would have put in the dollar pound trade, but
Yeah,
he's not. It hadn't triggered anyway, so we're not in bad shape. Jeff's got 5 trades running currently, all in profits, which he will go through management with you guys. Hopefully, if we can get Jeff being able to use this software as well. This is completely new software to us. Aussie CAD short. So yeah, great. Let's have some suggestions. Help us out, maybe. Aussie CAD short. Let's have a quick look. What we got?
That's the one we're in.
That's one we're in. Okay. Yeah. All right. Fantastic.
Where are you seeing these chats, by the way? I can't see anything.
If you look at private chat and then right next to it says live comments.
Gotcha.
Yeah.
Okay. Awesome.
There's the guys. This may end up even being better than Zoom. This might be better than Zoom because at least I don't have to open up a separate browser for YouTube. This is quite good. Anyway, so what we've got a risk-off day. Let's talk about that first. The Aussie CAD short. Jeff can go through. Can we add more short? Can we add more short?
Absolutely. If you've got an entry, absolutely, you can add more shorts.
15 minutes long. Somebody's saying on the FTSE. Okay, sweet. Why would you want to trade the FTSE long is the big question. What have you got here that suggests that you got a 15-minute long on the FTSE? Let's double check it. You know, think about the structure so far. What we've got with the FTSE is a downside and also a breakthrough here. You know, this is our breakthrough area here. So we are now under this particular level. We're under the monthly pivot. So really, what this is suggesting is anything back up to the monthly pivot is a short. So we shouldn't really be looking at any longs whatsoever at this particular stage. We should only be looking at the short. Now, if you go to your 15-minute chart, all you've got on the 15-minute chart currently are a few bars which are suggesting that it may well be bottoming out 15 minutes over 15 minutes just to drive us back up again into a potential area of resistance. And that resistance looks to me like it may even have some confluence. Look at that. That's coming down. So there's a trend line on your 15 from the high area on the 12th, and then this area here. So this pushing into this point would suggest further downside. So I'll be looking at downside around about 60-20 rather than any upside. Now, trading that into that area to get yourself a free short, I'd understand that. So if you're going if you're going long to go short, I get it. But it is a dangerous play because you know there's no definite suggestion it's getting up here. I opened up the market this morning, and everything I think bar one stock was lower. Even gold is suffering, but you know you look around the board. I quite like dollar yen for a short. I think that was a pretty decent looking chart. Probably around about 107.55. That could hold out that level. Maybe actually looking at this, it could well be the weekly pivots for a short. So possibly even pushing into 107.85 could be the short area. But I think
to school me on how to trade that prick of a thing.
Well, the dollar yen.
It's terrible. Jeez.
Well, do you know what, mate? I think it's a really good point because we are risk off. The market has sold off over the course of the last couple of days, and we've opened up negatively again today. And if we consider what the currencies are for risk off, the dollar is in that basket. You know, you would trade the dollar in a risk off environment. Now, the yen is also in that basket as well. So you're kind of almost looking at the wrong currency pair to trade. You know, if we're looking at potential risk on, risk off currencies, then the risk off currencies are going to be the yen, the dollar, the Swissy, and the risk on are going to be the Kiwi, the Aussie, the euro would be in that group as well. So really, we're probably better off looking at Aussie yen. You know, if we're looking at a risk off kind of market, then we should be looking at Aussie yen probably for our short rather than anything else. Now, I don't know.
Be a bit late on that one.
Yeah, and that's the problem. I opened up my charts this morning and I thought, geez, all this stuff happened during the Asian session. You guys are probably in much better shape than I have been. But it looks right now like we might well be getting some retracement. So there could be some opportunities. I have to be honest. I've done a whole weekend of an event, and I'm a little bit cloudy. So I'm not sure whether it's going to be the best day for me to actually take any trades. And just looking at the kind of markets I like. FTSE 100 and the S&P both look negative, but by the same token, they have kind of stalled. You know, over the last few periods, they have stalled. We're almost 2 15-minute periods in. They've stalled. Now that suggests that there could be some further downside, but maybe a creeping up first. So I'm looking around that monthly pivot and that trend line, and it looks like there's some really good confluence there for a short. I'm not too keen on going short just yet, but the market looks weak enough to take another pop down. I think the increasing in cases that you were mentioning to me off air, Jeff, in Beijing, that doesn't pose too well, was it? But you know, we had some half decent numbers out of China, relatively speaking, as well. So, you know, it's kind of what's your flavor. S&P in gold, S&P, and gold, sure. Okay, I'll tell you what, let's look at gold first, because the S&P...
Pound trade first.
Pound trade first, sorry, buddy. All right, pound trade first. Can you grab the screen? I don't know how this works now.
Oh, I think so.
I'll stop screen.
I don't know that you need to do that. I've got no idea.
Okay.
Screen sharing is easiest with 2 monitors. Screen sharing works best on good computer. Some screens like yeah, okay. Don't show these tips again. I've got all that. Share screen, but which screen?
Oh, it'll tell you. It'll give you an option.
Will it?
Yeah.
Are you sure?
Yeah.
There's a few things here may not be. Okay, gotcha.
It always sounds really
Rightio
shady when
ho,
you say
ho,
that.
ho.
Like you're running some sort of mafia.
Well, you know.
Yeah, planning the next heist. Just got Google up how to plan a heist.
Actually, there's we ran out of that one, series 4, wasn't it? The money heist. Yes, okay. Pound trade. The breakout trade today is based on the 1 hourly chart as always, and the range today is between the low of this bar here, which was the one that last completed prior to London Open, and this bar here, which is the third of the 3 bars that we look to trade. So it's a genuine range today using those 3 bars. The sell order is 10 pips below the low of the range, and that equates to 1.2444. And the stop loss on the short is 15 pips above the high of the 3 bar range, and that equates to 1.2541. The reverse of that, remembering this is an OCO trade, is a buy order at 1.2541. So the reverse of the sell, and the stop loss is at 1.2444. Now, those of you who are new to this, then here's what we're seeking to do. We're seeking to trade simply the breakout of those 3 bars, nothing more, nothing less. We're not adding any filters to this. We're not going to say, oh, shivers, we're trading into an untested daily pivot if we go long here, so we don't want to take the trade. That's what I would be doing if it was my analysis, but it's not my analysis. It's simply a breakout. So we're trading only that, and we're not saying, okay, we can't go short here because we're at DS1 or whatever the case may be, or there might be some resistance up here that tells us we can't go long, or there might be an outbreak in Beijing at Herald's second wave, so we can't go long, and et cetera, et cetera. We're not adding any filters. It's simply trading the breakout. So once we do get triggered into this, if we go short, we would then cancel the long, and if we get triggered long, we would then cancel the short. Immediately upon triggering, we switch to a 15-minute chart. I'll just go through Fridays, not that we trade Fridays because I'm generally nowhere near a computer. What bar? That one there is the 9 o'clock bar, so the range would have been 1, 2, 3, very tight range. So you would have got entered, goodness knows, we better just have a closer look at this. There's the bar, and there's the low of the range, there's the high of the range there. First trip would have been down this away, not 10 pips, so you wouldn't have got triggered into that. So you would have got triggered into the long, sadly, I think. Oh, shivers, yes. Okay, so you would have got triggered on that bar there. So we'll move that over to there. And 1, 2, 3, the entry would have been at 1.271. Hang on, 96, is that right? Yeah, it looks right. Okay, you would have been triggered at 1.2711. So we'll put that on there, 1.2711. Around about there somewhere. Doesn't look good, does it, for a long? One wouldn't think. So we then, as soon as we get triggered on that bar, we switch to a 15-minute chart, and we seek to trail 2 seller bars because we get, 2 buyer bars because we're going long. Let me just go there and there and go back to Friday. I'm on Thursday. Okay, it doesn't matter. This is for the demonstration purposes only. So our stop loss is down here somewhere. Wouldn't have mattered. I'll show you what happens. So we're looking for 2 buyer bars consecutively after we are triggered. That's the trigger bar. Shocking entry, as you can see. And if we were adding filters here, we probably wouldn't have gone long, but there are no filters, as I said. So the first two buyer bars that we come across are these. So you put your stop loss from where it was down here up under the first of the two bars, and that's where you would have got stopped out. So that would have been a small loss based on the stop loss there. Friday, it looks as though it might have been okay, but yeah, I know you might have got triggered long again. I won't go through that, but now you know how to do it, those of you who are here for the first time. It is in beta test mode. We are not saying that this is a proven strategy by any stretch at this point in time, so do not put any amounts of money on this. This is a test mode only. We've got about 3 or 4 weeks left in this, and then we'll go back and have a look and see if we could have improved the record, which I think is just around about break even. I haven't done the numbers on that for a couple of weeks, so we will catch up with that before the end of this week and show you exactly where we are in terms of profitability on this particular scenario. Right, Ash, sorry about that. We'll go back to you, and then I'll come back and show some management on. And I'm not sure how many trades you guys are in here. I think we've taken 2 or 3 of them in the evening show in the US session. So I'm not sure how many trades you guys are in, but we'll have a good look at that. Thank you, Helen, for your nice compliment. So back to you, mate.
Okie dokie. Which one are we looking at? I think it's that. I don't know what's going on here. There we go. There we go. So FTSE is continuing to struggle here. So gold, a lot weaker than I thought it would be, I have to say. But it could be, as much as anything else, down to some of the dollar strength. If we look at gold versus the euro, then it is struggling somewhat as well. So let's just check these on longer term time frames. Looks like there's a weekly pivot here. We have broken down this this particular level as well. So it looks like a bit of kind of an M topping pattern going on up there. We've broken through this area of previous support, so looks kind of negative for gold, but it may well get held up at this weekly pivot. But looking at it, looks like, let's just take this from a bit lower. Yeah, there could be some support there for gold. So I'm not 100% convinced on the direction really here with gold. I'm struggling a bit with gold, I've got to be honest, because it's another one of those that you kind of associate with a risk-off environment. So this is it against the dollar, currently. Let's just bring up a clean chart here. This is gold currently against the dollar, and there's a few patterns going on here, which may well suggest. Oh, I'll tell you what we're not able to do here is draw on the screen with this software, so that's no good. Yeah, there's
your magic tool.
Yeah, I can't do it. I can't do it with my magic tool.
Oh.
So this is no good. But there are a few patterns here. I can still draw them on MC4, but we've got this trend line along here. And the thing about this trend line here is that it kind of starts to suggest that if it can hold at this particular point, then what we're going to have is, oh, they're not in there. Okay, where are you? What I want are you. What we might well have is a little inverted head and shoulders kind of going on. So not in the best place. It's it's starting to look a little bit high, but you can see that there's a potential for a left shoulder there, head and right shoulder. So coming down into the 1706, is that 1708 area may well be a buying opportunity for gold. If that was to give way, then I'd be a bit more comfortable, suggesting that gold is probably about to break down. But it's been a tricky journey, really, for gold. I mean, we've had lots of different speculators, suggesting lots of different prices for gold. Now, I think longer term, we're still going to have to be bullish. The amount of debt which is mounting up in global economies does suggest that there is going to be some inflation, and gold is the hedge against inflation. So I wouldn't be that comfortable suggesting that gold would be anything but a long. The question really comes in: is it a long at this particular price? And if it holds here, I think it is. if it breaks down, then maybe we pick it up a little bit lower. Now, my approach to this would probably be to not short gold, because if I've got a longer term view of the world, which suggests that we should be heading into some kind of inflationary environment, the last thing I really want to be doing is trading short something which could protect against that, because I don't know when the market might just decide to turn around and change. Maybe it's a data point, a specific data point. Maybe it's a long grinding process. I don't know. So what I prefer to do is look for gold in this particular area, and if it breaks down, rather than trading it short, look to see where the next buying opportunity is, because I think longer term, I think being bullish on gold is probably the safer play, but it does need to cut back a bit. Let's just have a look at this on a 4 hourly. Yeah, you see on a 4 hourly, this down here is where the price structure is on the 4 hourly. So that may well eventually meet that trend line. That actually looks at 1714, but it's got to meet both of those two areas for me to be looking for a potential bounce. So I would like it to come back and test that trend line. I'm going to just see where the fib is as well. Well, there's a 38.2 retracement down here at this fib, which is looking at the lower end of the structure of the 4 hour. But there is also this 50% retracement, which looks to be right on top of that trend line. So I'd still be more comfortable at 1707, 1708, maybe to 1710. That area for me would be an area worth looking at. I'm not going to say a tradable opportunity, but it would be an area worth looking at. This still looks a little bit in the mix and slightly confusing. So gold, it's a bit of a wait and see. Now that's not to say that if you get a bar here that I wouldn't trade, that I wouldn't suggest to you that you should wait if you like the setup. If there are other things that you like about the setup, and you see a bar here that you'd like to trade, or maybe you're on a different time frame, then I wouldn't be persuading people not to trade gold long. When it comes down to persuading you to go short at this particular area, I think it's probably okay, but it wouldn't be something that I'd want to do. I'd want to wait for my particular price personally. Now the S&P is looking to be in a difficult spot right now. And I think the most significant and important bar or chart here is the monthly. And it's because of this bar. Now, we are only halfway through the month of June. So this bar can change. But the look of this bar could change. But that doesn't mean that we shouldn't be trying to trade at this particular point. And we should be anticipating this bar to be negative at this particular point. We've got a lot pointing to the downside. We've had an astonishing run up. The only way this astonishing run up is able to sustain is if we have the V-shaped recovery that some commentators have predicted. V-shaped recovery at this time of the year is going to be under stress. The S&P global equities seasonally do tend to weaken at this particular time of the year. So it's unlikely, or the likelihood starts to diminish if we take all factors into account. The numbers haven't been abysmal, the numbers have been abysmal, but the numbers, relatively speaking, considering what people were expecting, haven't been as bad, and economies are opening up. The fear is the second wave. We've heard from Beijing of a potential second wave. If a second wave comes and the economy shuts down again, the market's coming down. But by that time, it will be too late on any entries. So the question really for us, or the question I've got to ask myself, is what is really my view of a potential second wave? And are there enough... is there enough aid out there from central banks and governments to manage to get us through the second wave? And I'm struggling to find how they would cope with it.
Absolutely.
It's the debt, isn't it, mate? The debt in the United States is just astonishingly high. The debt in the UK. I mean, you want to look for a shorting currency. Forget risk on, risk off in a way. Because risk on, risk off is a unless you're in, it becomes a really difficult thing to start picking up. You know, what if we're going to trade risk off, then we want really a bit of risk on for a day or so. While it's looking like this, we can't really trade the. I don't think we can anyway. I don't think we can trade global equities short at this particular stage. I think we probably need to be looking for a bit of a pop up to an area of resistance and then able to trade it at a short area, because you look at this on a daily, it's gapped down. Not a safe area to trade in. You know, the only way this is going to really move is with heightened fear. You know, significant heightened fear. So while that's not going on, which we're really seeing, you know, with the FTSE and looking at the FTSE and how stable it is at these particular levels, and as it's opened up, that fear hasn't really taken its grip yet. If we're going to see fear in the market, it's probably going to be on the open, and that hasn't happened. So do we start to drift a little bit? Possibly. Do we start to get a little bit of a push back into the monthly pivot and then see if there's a trade? Probably, you know. So we could look in those areas. It might still be a little bit low. We might you know, I might prefer to kind of wait until there's a bit more of a push. But with the S&P, you know, gapping down this morning, if we haven't got into this trade up here, then there's not really a lot we can do, you know, because there's still a chance that we could pop up and then provide a decent opportunity. But it is the question of stimulus. You know, I can't square the circle of if we do get that second wave and a second lockdown. You know, I just can't figure out what the market is going to do. Now, the only way to navigate around that is to not trade the currencies that are more subject to fear, risk on, risk off, because risk off will put us into a sell with the Aussie and a sell with a Kiwi. But if you really consider the currencies that are in the strongest position to get through this, it's the Aussie. You know, and the Kiwi, the debt levels in those countries are nowhere near the debt levels what we have in the United States and the UK. So if the market is going to be, you know, selling anything off, you know, if it starts to sell off the pound, that would, for me, would be a decent ride. You know, it's well worth going for. Brexit deal is looking more and more unlikely. Certainly, a comprehensive trade deal is looking more and more unlikely. So the pound is highly likely to continue to weaken. And the debt levels, as I say, you know, that the UK economy is not in anywhere near the same shape as the likes of Australia. So with this particular environment, then we do have two choices. We kind of we take trades, hold our nose, and hope for the best to a degree, or we find currencies that aren't so interrelated with risk on, risk off, which are going to be some of the miners, which aren't going to be maybe so palatable for people, or we just wait it out. You know, wait it out until we do find just a little bit more of a bottom and a little bit more safety in the market, and we trade the currencies that actually are in pretty good shape, which would be, you know, things like the Aussie and the Kiwi. Now that basically means that trades today are probably not on, in my opinion. Roy, did you get into that oil trade? We were talking about that oil trade last week, and we picked out that 15-minute signal, and it was a cracker. I don't know if you managed to get into it or not, but I'll be interested to know whether you managed to take advantage of it. Oil is also pretty weak right now, right? Well, you know, the ones that would be the least subject to it are things like, I mean, things like the Kiwi, things like the Noki. You know, if you think what are the currencies that are really risk off, and it's things like the yen and the dollar and the Swissy. Things that are risk on would be the Aussie, and I did mention the Kiwi, but the Aussie would be probably the outlier, and the CAD. You know, sort of like things that have commodity based currencies. That the Kiwi might be in that basket, but it's less so. But you could certainly look at the NOK, which is the Norwegian krona. You could certainly look at, to a lesser degree, you could look at the euro. You probably could look at the pound as well. You probably could look at the Kiwi to a point. Yeah, it's difficult, Helen. Do you know, I looked at this chart this morning and I thought the Asian session really had the best advantage had the best possibility to take advantage of the move, because as we opened up with the FTSE, then I think the next day cruised in here. And if you look at this, there is this head and shoulders pattern, and on this right shoulder there was an opportunity. But really, since then, now it's started to break down. The opportunity, yes, is still short, but if I'm honest, I'm struggling to find an entry that I like. Now, that doesn't mean there's no entry. It's just that I don't like it. I don't see the value at this particular point, and I'd be happier to miss a move to the downside so I can get my shopping trolley out to go and buy stuff up, rather than trying to catch this particular one. Now, it's hardly a falling knife, is it? I mean, it's kind of suspended in midair. Oh, Gary, there probably is. How can I help you with that? Yes, hold on one second, mate. Let me just. Can James still hear? Hold on.
Are you ready for me to go through some currencies, mate?
Yes, mate. Go through some currencies.
Yep.
I'm just gonna go give Gary a bit of support here. Kiwi dollar, Aussie dollar didn't trigger 2. Is that you, Jeff?
Kiwi. I didn't trade the Kiwi, nor did I trade the Aussie.
Okay, I mean, look for some dollar strength in this period as well, guys. And this is the other thing. The S&P comes down, the dollar is likely to go up. So you can kind of look at the two as a proxy. The S&P is weak, so you can look for trades, against the dollar right now. And as I say, I think you almost do pretty well to look at the pound versus just about anything right now. I think the pound is going to be in all sorts of trouble. And looking at this, it looks like we may well be hitting a potential level of support. But just watch the pound and see if there are any reversal patterns going on here. At this particular stage, it looks like the pound may well struggle around about the 125.53 level. If we look at some of these indicators with the pivots, yeah, look at that. That looks like a really good level. So I'd be interested in shorting the pound. If I'm going to be looking at trades today, I think I would prefer the currencies, and I do like the pound for a short. So I think looking for some weakness in the pound around about the weekly pivot, 125.70, 125.50, something like that. From there, we can check out some other ones maybe later on, but pound for a short around about that weekly pivot, daily pivot area looks pretty good to me. But let's pass to you, mate, and I will just see what I can do for Gary.
Right, mate. Unfortunately, it says I am sharing. Oh,
you are.
Did you do that?
No, you did.
Oh my God, not again.
Did you fall asleep while you did it?
I didn't do anything.
Trading. You sleep trading.
I just asked the question and it came to me. Unbelievable. All right. As I said, you guys, I'm not sure which trades you were in, but throughout last week, in particular on Wednesday and Thursday, we had multiple entries, pardon me, and I'll go through them as managements here at the moment because they're all currently in profit, at least they were last time I looked. I'm going to add a different slant to the currencies because technically I see some incredible opportunities. And I said as much 3 weeks ago, wait for this, wait for this, wait for this, wait for this, wait for this. And those setups have now come. And that's why we're in so many positions at the moment. And I said to you guys last week, I could have traded 20 different currencies, but they would all have been the same trade. Every single one of them would have been the same trade. And that's why they're all going together at the moment, because they are the same trade. We have gone from a risk-on situation to a risk-off situation, in my humble opinion. But that also marries up with technicals. So if you look at euro dollar, which is I've got here on the screen at the moment, right? And we entered this on Thursday night, trading this bar here. And you can see I've got my stops very, very tight underneath this swing right now. Not tight to the entry, not tight to the market. The reason I took this trade is, well, in fact, I'm sure I went over this with you guys, but if I didn't, then let's do it again. My very favorite level around here is 113.60. And the reason it's my very favorite level is because there it is right there. That's actually above it, 113.94, but it is a cloud of a price. Once we got into Brexit and the euro just tumbled, this level here held the market for the longest time, right through pretty much the first 2 years of Brexit. We were in a range here and it just couldn't burst out of it. Eventually it did back in June 2017, as you can see, and it came right back to that very same level, which is this between 113.50 and 114, basically. And we spent another forever time there. Then we came away from it a little bit to the bottom of the channel, bang, back up to it again, back to the bottom of the channel, bang, back up to it again. And that incredible bar there that we saw, and I can't even remember what that was about now. It seems so long ago, but it's only a matter of 2 or 3 months ago. So that should give us a hint as to what it was. But we couldn't maintain any closure outside of this descending channel. And now we've broken out of it again, as you can see, and went to that level again, and we've rejected that level again. And that's primarily what I was basing this trade on, the fact that we came off that level and we expect retracement. Now, I don't know if this is going to be reversal or not. I've got no idea. Well, actually, that's not true. I do have some idea. And I've got some idea because I shared this with you guys the last couple of weeks as well. Because I've been looking at this chart, right? The dollar index chart, which has been telling me that we are going back to the 98-cent mark. Remember, we were talking about this all last week and maybe even the week before. We first nominated this level here, I think it was, just underneath where price is at the moment, as a bounce level. Then we nominated here as a potential bounce level. And we're looking for this area here, bang on the 98 mark. So am I a euro bear? Yes, but only until the US dollar reaches this mark here. Then I'm back in the driver's seat as far as a long's concerned. But this could take us a fair way down. And I'm really hoping that it does, back into that range that we just had a look at. So that's primarily what everything and every one of these trades has been based on, the dollar rallying again, but only back to that level. So I'm only a short-term fan, pardon me, of what we're going through at the moment. And hopefully the screens that I'm switching between, unlike Zoom, are actually on your screen. So I want to see this come down, absolutely, maybe to the monthly pivot, or even down to the bottom of this bigger range, or even, if you like, right down to the bottom here, whilst the dollar is strengthening again for whatever reason. But technically, I've shown you why I think it's going where it's going, or what I perceive to be its target area. So I'd like to see euro dollar come down to here somewhere, or even down to here. And if that's the case, we'll make a fair bit of dough on it. Happy days. Euro yen, pretty much exactly the same boat. Technically, we hit a strong resistance level. We came back off it with a vengeance, and on the smaller time frames, this looked pretty cool. As a, well, you probably can't see that because it's covered by my entries. You could see a very clear topping pattern here, in my humble opinion. The shoulder's not great, but they were there, and that was the right shoulder, and that's where we took our first entry short under here. It was triggered not in the same day, but the next day on this bar here. Then we saw the neckline, which came through here, break and we actually saw that first. Break and retest of a neckline is definitely a go for me. Now, the neckline wasn't very clear, but it's there, and that's the second entry that we took on euro yen. What do I expect out of this pair? Well, as and Ash has just been speaking about, we are now, in my humble opinion, in a risk-off scenario. Therefore, the yen should rally. And for that reason, I think we can continue to trade this at least till we hit a strong support level. Maybe that's the monthly pivot. So if you're not in both of these trades, or if you're in neither of these trades, I still think there's an opportunity to trade the rallies, so short the rallies. Is there a rally here? No. You're in a little bit of a range, so it's a bit tough. And today will be a bit tough to find an entry unless we get back up to here. The daily pivot, maybe, but right now is not the time to enter, in my humble opinion, that position short. But it is still time to hang on. I haven't actually taken profit yet on the second trade. Pardon me, we're still quite away from entry, but this is the one where I said we'd make some money the second position if it does go. So if it does go, we'll take profit down here somewhere, as I said, about just under the 120 mark, and then we'll start to make some money. I think this can go a fair way, and monthly pivot seems to be a reasonable position for it at the moment. So there's three trades. The fourth trade was Aussie CAD short. And Aussie CAD shorts, I don't know if we took it in this show or another. I think it was taken in the show, actually. Where's the entry here? Yeah, so that was in London session. So you guys should be in this one as well. Again, a topping pattern. You could call it a head and shoulders. You could call it a double top, a triple top, whatever you want. There's your first lower high right there. And there's your second lower high right there. It didn't actually turn out to be a lower high, but because we put our entries underneath a buyer bar, most important, if the market was going to take off and take out these highs, it would have, and we wouldn't have been taken into the trade. It didn't, and we did get taken into the trade underneath that bar there. And there's been heaps of opportunities to get back into it inside this range as well, if you haven't got into it. If you didn't get into it on the first occasion. So there's a break and a retest on different time frames. There were heaps of opportunities to get into that as well. Now, I don't know with this one, to be honest, because, as Ash said, the Aussie has got claims because, like the Kiwi, despite the fact that they are risk-on currencies, we have a situation where New Zealand is pretty much free of the coronavirus. Australia has got very, very limited cases of coronavirus. They are both reliant on commodities, which are going to come out of this very well, one would have thought. So in a sense of coming out of coronavirus, as I said before, I think, and the economies are far better off. The debt levels are far better off than most countries, even now, regardless of what happens coming out of coronavirus. So I think they definitely have claims, both the Aussie and the Kiwi. Problem is with the Aussie, and here's what I see, and I've had a yarn about this to some pretty good traders, mind you, who disagree with me, and that's fine. We all have our different ways of looking at things. I believe that Australia's fate, Australian dollar fate, rests firmly in the hands of China. Not just because, we're relying on them for trade, but because they're putting immense pressure on Australia at the moment from a trade point of view. Now, whether they can sustain that or get really serious about that by imposing tariffs on things like coal and iron ore in particular, if they can afford to do without that resource, if China can afford to do without that resource, then Australia is going to be in real trouble very fast. You'll note that China hasn't imposed tariffs on both of those at the moment. They have on beef, they have on barley. So there's definitely issues around. They've also sentenced someone to death at the moment, and the politicians are having an interesting time with that one as well, internally here in Australia. So there's a pot brewing and I'm just not sure about the Aussie at the moment. But technically, you know, that setup was there, so I've got to trade it short, and that's what we've done. I've been looking for a short on the Aussie per se, not just against the CAD, for quite some time, because of that reason that I've just mentioned. But it's still rumour and innuendo. Nothing's come of it. So the Aussie could very well take off again. It's really a question mark. And that brings me to the fifth trade that we're in, and that is pound Aussie. You know, I take on board exactly what Ash has said and agree with him about Brexit. And I feel it's probably time to be circumspect around this one. We've got to be a little bit careful here. Now, we have taken first profit, but I've only taken a third off here, which means I'm still at risk. I think if we can break this high, we will get our TP2 on this, which is around about, I can't remember now. It'll probably be up here somewhere. 185-ish. Some of you guys may remember what that is. I'd have to go and have a look at my other chart to do that, because I didn't nominate a TP2 in this trade signification up here. So I'm more than happy to stay in this for the short term, but I totally agree with Ash. It is very, very difficult to be bullish the pound. But again, as I've said, the Aussie is very much a currency in the balance at the moment. It could go either way. And if it goes my way, then we're going to make a truckload of money. If it doesn't, then no harm done. We've taken profit on both trades. I need to probably manage this one a little bit closer than the others, because I am still at risk here. Very small risk. I've only taken TP1 as a third off, but I'll definitely be looking today to bring this stop up. Depends on what happens, of course, but I'll probably be bringing my stop up, you know, here-ish, somewhere like that, to make myself safe in the market. But I really want to see if we can get through this high today and go from there. So as far as those trades are concerned, the management is, yes, make yourself probably safe if you can here. Entry level is just in that vicinity. That's probably what I will do, depending on what happens today. If we come down to the daily pivot, then I probably won't do that. We've still got the weekly pivot protecting us, so I might just move my stops up to underneath the weekly pivot. But I'll update you guys in both shows, because, as I said, I'm not sure which trade you're actually in. As far as today's concerned, there was one that I'm quite interested in, and it is pound CAD. This is more of a weekly trade than anything else. And what I see here is very, very similar to what I saw on pound Aussie, not surprisingly, because we're trading the pound versus a commodity currency. But this really does look technically a base that has broken and been retested to the high side. Monthly pivot, as you can see, came into play there. There's two ways to look at this. We've got the weekly pivot sitting underneath price, and it's showing me a potential false break of that trend line. In fact, the setup is there right now, because we've come back inside and we've retested it. I think this is a reasonable OCO to take. So a breakout, pretty much similar to what we trade every day on the pound. And I'm going to use the pivots, the monthly pivot and the weekly pivot. So I think if we can get a reasonable distance away from here, so let's say 20 pips above the monthly pivot, if you're willing to take these positions, enter long 20 pips above the monthly pivot and enter short 20 pips below the weekly pivot. And I think that can give you a result by, let's say, the end of the month. I'm not saying by now, by next week or the end of this week, but I think that's got potential to give us a pretty good result. Because if this breaks out to the high side, it's probably going to come back and test these highs. If it breaks to the low side, then it's probably going to come down and test these lows. And that is a potential weekly pivot's about here somewhere. Nearly 1,900 pips to the low side, and to the high side, if we were to get into that and it broke through, even if we just get to the top of the range, we've got 600, 700 pips to trade there. But if we manage to get to the highs here, then we're talking 3,500 pips. That's worth it, and I think I will place that trade. I was going to do that this morning, but I haven't done so. I've been very busy. But I think that's a reasonable position to take if you want to do so. So that's pound CAD on the weekly chart, or it doesn't really matter on which chart. You just use the levels, the monthly pivot and the weekly pivot. A break either way, I think, is a reasonable position to take. So I think that's probably where I'm going to leave you for now. I don't see any, in fact, I'm really not interested in trading too much at the moment. Now, because I'm more in management mode than anything. There was a question earlier, is it okay to trade Aussie CAD short? And I assume that you're already in the short, and that's fine. And the answer is yes, absolutely yes. The problem you've got is, where's your setup? If you find a setup, you've got to have a setup. So it's just not a matter of going, okay, I'll jump into the market here because it's started to go south. You've still got to have a setup, and it's looking a little bit messy. So whatever your poison is in terms of setups, then that's what I'd be looking for. If I'm absolutely frank, there's no way in the world I'll be going short here now until we get at least a daily pivot test or even a weekly pivot test. So what I'd be looking for today to trade Aussie CAD short would be a bit of a confluence somewhere. So let's say we got up to here and hit the weekly pivot, then we came back underneath and retested the daily pivot from below. Yeah, then I've got to trade short. At the moment, I think we just need to allow this to retrace and suck back to the pivots. And I'm happy with that if that does that. In fact, I'm really happy with that because, yes, I think it is a scaling point. And you should be safe on this one. That's the only one you shouldn't be safe in at the moment is pound Aussie long. And I would suggest that by the end of the day, you would be looking to do that. Probably stop. If we go through the high here, stops to entry for sure. And look for that TP2. So there you go, mate. That is me around the grounds, and I will be updating all of those again, of course, in the US session. But I don't see any entries at this very moment.
Okay, fantastic, mate. Just a quick thing for Gary. Gary, James has posted in for you there. So if you see the Actions to Wealth, he just says, hi, guys. Any questions regarding the weekend course you have, please kindly email contact@actionstowealth.com. And this session is not arranged for such matters, and the presenter will not be able to ask. Not sure why he's put that. I'm not really sure why he's put. Oh, assist you. Oh, he didn't have enough words. There we go. It came in on the next line. I don't know if you've seen that. It's the action.
Where are you looking at?
If you look at the live comments, 8:57. You see it, 8:57.
Ist you.
Yeah, but the just one above that, it didn't finish. So I was reading. I was reading the last couple of words there. So we will be back.
Okay. Yeah, got it now.
Back, as you say, at the US session, the pound is looking pretty good. It's moving back to the upside, which is good because what we're really after here is some downside, as you can see here. There is some downside that will likely come, but a decent bar here. Now, you guys that have been in on the weekend, you will notice that this is an engulfing bar, and the engulfing bar suggests that the next bar probably won't be the best opportunity if this one closes like this. It's still got some time before it does close like that. It's a 4-hour bar I'm looking at here. But if this bar does close like this, then it would suggest the next bar would probably not be the opportunity. But if there is some weakness after the next bar, then there may well be an opportunity to short this. And that's what I'll be looking at. So still looking at the pound for a short, somewhere around about the daily pivot or weekly pivot. Whether we need to let this particular time frame close, I don't know. This bar,
we have been figured long on that, by the way.
Okay, long on the pound. So there you go. This
Cancel
is
your short to move to a 15-minute chart. Yep.
There you go. Yeah, move to a 15-minute chart, and you should be able to make some money out of that, and potentially also make some money to the downside if that one occurs. This is a morning star, and the morning star does suggest that there is going to be some upside here. So that is really what is playing out, and we need to see what happens after this particular move has played out. So let it push up into this.
Technically, a shocking entry. I hate the entry, but anyway.
Oh, I mean, yeah, it's right on the daily pivot, isn't it? But that's the strategy, and that will be fixed.
Friday's little swing there as well.
Yeah,
horrible. Anyway, that's not what we're trading.
They'll be fixed as we go, and I'm being told that gold is holding at the monthly pivot. Yeah, pretty good, isn't it? I mean, again, look at this bar here. Now, because the market is coming down, would you be looking at a short here? Absolutely not. You know, you've got a hammer here, a really strong hammer here. Now, that does mean that if this low gets taken out, there could well be a decent drift to a decent downdraft, because the price will be through the weekly pivot. It'll obviously be through the monthly pivot, and there will be stops in this area. You know, if you think about the entry at this particular point, people will be entering this bar at the high. You know, it's an obvious bar to enter on at the high. However high it is, but you know, however high they decide to enter is going to be a question for a lot of other people that are in the trade. But there is a likely stop area down here. So if this is a short, this area down just below this the bottom of this hammer would look at this particular stage like a pretty good place, right? To enter some shorts, a pretty good place to be looking at a move to the downside. Don't know how deep that'll be, but the likelihood is that you're going to get some movement if it breaks this low is highly likely. So shorts under the bar. The long areas are going to be above the bar. That doesn't mean that you can't trade long within the bar's range. And coming down to the weekly pivot, to me, looks like a pretty good long in some respects, because you've got a nice tight stop. So so there are some comments on gold. It is weaker today, and we have to recognise that the dollar is fairly strong today as well, which is another reason I quite like the pound as a short against the dollar. But let's come back in the US session and review these, mate. FTSE's just getting a little bit of CPR. Is that the terminology when there's some breath going into it? Is it CPR?
Yeah, close enough.
Yeah. So it's getting a bit of CPR, and it's still likely to push up.
Pulmonary resuscitation. There you go.
Yeah, just for the full term. There's every chance that if we push up into the trend line, or if it has some confluence with the trend line and the monthly pivot, that then there is a selling opportunity with the FTSE. But watch out for it, because if it pops through this area, then the risk on may well be back in play just for a day or so. But I suspect it's going to be a bit choppy today, mate. I haven't seen any real conviction.
Yeah, look, it's Monday. We had a bit of movement on Thursday and Friday, so yeah, no surprise. I suggest we might have a little bit of consolidation. I don't know that I'd really like to be getting into the market too much, and I think CPR is actually not particularly correct. CPR is the one where you press the chest.
Okay.
Mouth to mouth is the one you're after.
It doesn't sound as good though, does it?
No, it doesn't. You're right.
And you know, given the current climate, I don't think we can do that sort of stuff anymore.
No, that's off limits,
so we might have to go with CPR. The trend line might actually be a bit lower. Just looking at this FTSE, you know, there might well be a trend line down here. This one is better. You got a touch here. You got a touch here. You got a close price here. There's a touch here. So that really will run into the monthly pivot. So a sell at the monthly pivot actually looks pretty good. I'm just going to see whether I can actually put this order in. I might well put an order in the market at that particular position. Let me see. Right. What I'm going to do here is I'm not going to anticipate this area as a short. What I'm going to do is see what the hourly looks like. If the hourly closes on the monthly pivot, I'm going to take the short. But I'm going to let the hourly close. And the reason for that is I don't want the hourly to push beyond this trend line. Now, I'm now going at the lower trend line. I'm not interested in this one anymore. So if the hourly closes above 60.30, no interest for me. But if the hourly closes anything below, I am going to take this one, and I'm going to take this one as a short. So just so you guys are up to speed of what I'm looking at here, I'm just going to check the other charts just to make sure that there's no danger there. That looks all right, doesn't it? Yeah, this looks pretty good, you know. 6 pips. Yeah, this looks pretty good. I like this this monthly pivot. So I'm looking at an entry here at 16, around about the 1613 area for a short. But I want the hourly to close. I think I'd be a lot more comfortable. And given what we've got today and the movement in the market, I think it's less likely to spring up and spring down. It may happen, and that would potentially mean missing the trade. But I'd quite like to see if it closes here. What does it start to distribute in this area? Now, will we have that on the US show? We might. We might get an opportunity to trade this all together on the US show, and I'll show you just a little bit more detail of what I might want to see if we are in this area. But if not, then I'm going to look at the hourly chart, and there's a high potential that I'll be taking, high probability I'll be taking the trade short on this monthly pivot. But I'm not going to set an order. So if you guys want to set an order, then you know that's going to be down to your own discretion, and it wouldn't be the worst thing in the world. But I quite like the possibility of seeing some close prices first. Now, what the other reason I quite like to see that is that there's a chance that we do come and test a little bit higher and then close. So I'm not going to take it just because it's moved into this area, but we might just pop up and then pop back down again. So I'm going to look at this one. It looks like we've just got a little bit of positivity entering into the market here. So let's give it some time and see what we have.
When did Boris say that?
Say what, mate?
He's prepared to accept a no-deal Brexit.
Oh, he said that from the start, hasn't he? But
that's not news, is it, really?
No. Do you know what? I mean, the UK government have been pretty inept, I think, over quite a few issues recently, and I think the fact that that was their initial stance. I've got no faith in them going out and genuinely trying to get a deal. I think that it's either very kind of tight rhetoric, and they are quite happy to let everybody believe they want and quite happy with no deal, so they get a good deal, or that is their actual position. It's very difficult, isn't it, with politicians? They talk so much BS that you just don't really know whether it is just a little bit of positioning, or whether it's accurate. And I think Boris Johnson, considering his background and his education, he is an incredibly skilled wordsmith. He's very, very good at it. That's what they do at Eton College, which is where he went. They train people how to manipulate the English language. So I haven't. Yeah, exactly. But they don't train. Well, this is it. They don't train the rest of us to kind of know when it's actually a lie and when it's the truth. So we know they lie a lot, but we just don't know when it's actually when we're in that kind of situation, or whether they're actually telling us something which is actually honest at this particular stage. So if we take him on his word, then the no-deal Brexit is absolutely fine with him. If we take him
generally, they're being honest when their mouth's closed.
Yeah, exactly. Which it rarely is. So yeah, I don't know, mate. It's difficult because if we take him by his word, then no deal's fine. If we take him of what would be sensible and good for the economy, then it's probably positioning. So I don't know, man. Take from that what you will. You're in probably a better position to me to judge it, but I'd have to go back and really kind of look at his speeches and see if I can figure out when he's lying and when he's not. I know what you mean. It's when his mouth moves, but his mouth moves all the time. So there's got to be some time he's telling the truth, I would have thought.
Potential.
Yeah,
that's all obviously.
Yeah.
A mystery has been solved. I just
Yes.
looked at private chat, and
Okay.
James put me into the parallel universe earlier. It was a thing. It wasn't
Okay.
didn't just happen on voice command. Now there are a couple of questions in the questions box relating to Euro Pound and Pound Kiwi.
Yeah.
Do you want to share those charts, or do you want me to do that?
I mean, Euro Pound, I'm quite happy to talk about. You might be better equipped with Euro Kiwi. Euro Pound, I can't tell you how pig sick I am with this one. I was in long down here. I got pipped out on my second half by 2 pips, and it's 140 pips after that it moved. Now look at this, the 4-hour chart. This is looking like this is an engulfing bar, and it's not just an engulfing bar, it's a significant engulfing bar forming, not formed, but forming. So what is going on with the pound? And that's the big question. So let's just double check. That's the pound Aussie pushing nicely to the upside. There's the pound Kiwi, fairly flat actually. But the pound dollar we also did see giving us this engulfing bar. So what's going on with the pound? Something's happening, mate. That's certainly what we can surmise from the move, I would suggest. But let me see what it might be.
Yeah, I don't think it's anything too dramatic. I mean, it's not going nuts.
Well, this looks like a pretty significant bar to me. I mean, maybe it's just that the potential price point. I don't know, but anytime I see any upward movement with a pound, I'm really interested in shorting the pound. Well, I want to know why. Yeah, I mean, it's it kind of almost makes no sense. But the pound is moving down. That will potentially move the FTSE higher, which is another reason we need to wait for some of these bars. Where's the level on the pound? Looks like the weekly pivot looks pretty good, doesn't it?
Again, have a look at the pound on a 4-hour chart and go a little bit wider and tell me.
This is the 4-hour here on the Euro Pound.
Sorry, pound Aussie I was talking about.
Oh, pound Aussie. Okay.
You stick to Euro Pound. Sorry.
Yeah, only because I'm just a bit more party to what might drive the euro. The Aussie. From my understanding, or certainly from my belief, is I think it's the only game in town for a long, mate. I mean, it's and I'm talking longer term. I really like the Australian dollar. I think the Australian economy, and considering that New Zealand's now come out of lockdown, I think that those currencies in those areas seem to me like they appear to be some pretty good options if it starts to turn again. Right now.
Yeah, look, as I said earlier, I don't disagree with you, but what I really am thinking is this threat that China has put over Australia at the moment.
Yeah.
So I think on that basis, I think Aussie Kiwi's been a magnificent sell, but you're way too late to get into it.
Oh, do you know what? We were talking about potential risk on, risk off as well. Aussie Kiwi would definitely be in that. You because they both kind of live in the same areas. You can then trade the pairs that have relationships. Euro Pound, good relationship, so decent one to trade. Aussie Kiwi, great relationship, so it's a really good one to trade. Hey PH, how you doing, buddy? Nice to see you in the room. But yeah, so I like those trades, mate. But I haven't looked at the Aussie Kiwi, so in fact, haven't looked at it, and it's just here. So why don't I have a look? Yeah, that is short. But I would be looking at some of these pairs actually for maybe something which could be a bit easier to trade overall. Not right now, but overall. I'm going to hand you the chart, mate, for the Euro Kiwi. Was it
pound Kiwi?
Pound Kiwi. So if James is there, he will hand you the chart for the pound Kiwi as well.
It was the pound Kiwi, I think, wasn't it? Yeah, it was.
Gary's got a long gold order and it's activating soon. Let me just double check why Gary's trading that.
And Gary's got pound Kiwi short coming up on H1. That was the question. Well, I don't think it was a question. It's probably a statement. Let's have a look at it.
Not the worst trade in the world, in my opinion, but I don't know what the chart looks like.
Well, I'll start from here, the monthly chart, because the hourly chart tells me nothing until I understand what's going on. So what I see from here is I suppose, pretty obvious given what we've just spoken about and the claims that the Kiwi has to rally versus the US dollar and the claims that the pound doesn't have to rally against the US dollar. So, relative strength, you've got to go with this one short, and I get that. The monthly chart's telling me that's the case. The weekly chart's telling me that's the case, but maybe not for so much longer. And we are at a support level, and that support level is pretty strong, as I see it. We've been through it and now retesting it. So that's interesting. I find both of those charts very interesting because I see a target down here, but I see a strong resistance level or support level as it is, resistance level as it currently is, exactly where we are. Let's investigate further and go down a couple of charts. The daily, let me tighten that up just a little bit. The daily's got claims for a bullish engulfing bar, bounce off the weekly pivots, and potential for a double bottom. But that's all potential. What I do see is also potentially the false break of the bottom of that channel. And by that, I mean we've broken it, we've consolidated it, we've come back inside it, and we've retested the bottom of that channel. This, to me, is a potential for price to go back to here. I'm not saying it will. I'm saying it's potential for that to happen. I don't normally trade false breaks off anything but trend lines, and that's not a trend line. It's connecting the lows in a downward motion, not the highs. That's a trend line. That's not a trend line for me. So I'm not really looking for that to be a false break unless it shows itself on a support trade line, which we now go to. Let me just put that where it belongs. This may take a while, Gary. No, it won't. I'll get there in a minute. Okay, so this is very similar to what I've seen on every other chart, and that is we've had a big down run. We've put in a little base here. Then we've had a higher low, a higher high, higher low, a higher high, and now the potential clean out bar. This could be what we refer to as an aversion point. And if that's the case, what I saw on the bigger time frame may well come to pass. It's tough to trade right now. If you're seeing something on the hourly chart that suggests downside, then okay, I can go with you. I can agree with your analysis, but my analysis says to me, I'm not looking for shorts right now. Don't know if I'm looking in for anything on an hourly chart. To be fair, we've got high test bars and low test bars, and that doesn't do much for me. We've really covered the pivots here. They're very, very close together. That suggests to me that consolidation maybe. Okay, I see what you're seeing, but it's not for me. I'm not a fan. We shall see. Trade what you see, not what I say, by the way. Don't let me talk you out of a trade by any stretch of the imagination.
Just realised the time, mate. I better hop out of here.
You better. You get sacked. Absolutely.
Yeah, I will. All right, guys.
Bit of a late start.
Bit of a late start, yeah. We'll be back normal time tomorrow, though, and we'll be in the US show at 2 p.m. UK time today. But for the rest of you, we will see you tomorrow. Same trade time, same trade channel at 5 to 8.
That's a date. Don't be late.